Hi, I'm David Witter, founder and CEO of Financial Harvest Wealth Advisors. Welcome to the Election Effects, how to be successful no matter who wins in November. And no new news here. It seems like each day that we get closer and closer to the election, there's more concern, more uncertainty, even more unfavorability of the two candidates, the two choices that we have. And I see that there's a lot of angst as we get closer and closer to the election about what do we need to do with our investment portfolio and our capital that's in the equity markets in order to prepare for a Trump or a Clinton win. So what I decided to do to bring some perspective and help with that is I went back through 88 years in 22 elections. Going back to, you can see here, this is Hoover in the roaring 20s, moving into the Great Depression and the FDR, Truman, Eisenhower, JFK, Johnson, Nixon, Carter, Reagan, Bush, Clinton, Bush, and then Obama. And then also in this collage here, I put in some pictures to give you a sense of the geopolitical events going on at the time, as well as the advancements in technology during that time. And I think what you'll see is, regardless of politics and presidential elections, there's still an overall advancement in innovation, people coming up with new products and new services and then selling that into the marketplace, which then produces profits for companies, which is what really drives the equity markets. So let's take a closer look at each presidential election and the effects. So this first slide here, we look at the S&P 500 for each 4-year term going back to Hoover all the way through Obama. So notice that we have 22 4-year terms. Out of the 19 of those are positive and only 3 of them are negative. Also notice that the 3 are negative was during the Great Depression, World War II, and also the financial crisis most recently, which are events that really weren't affected by the president. It was more like a geopolitical event that couldn't have been anticipated in advance. So the other big takeaway from this is 19 out of 22 are positive, and when you average them up for all 22, the average return during the 4 years has been over 10%. Strong performance regardless of who is elected and what's going on at the time with the election. Second thing I wanted to look at was, where did it begin, the S&P 500, and then where did it end up? Now, I didn't drop a zero here. Back in January of 1928, the S&P was at 17.5. Today it's at 2159. That's a 1,238% increase, not including dividends. So tremendous wealth creation despite what's going on politically throughout that time, if you stayed fully invested in your equity portfolio. If you're pictorially oriented, this is a great graph. It's called a dollar growth chart, showing you that if you started with $1 90 years ago, it grew to somewhere around $5,000 or $6,000 today, which shows you the compounding growth effect, regardless of whether there's a blue Democrat in the office or whether there's a red Republican there. You can see that going back and forth. Next thing I want to look at is the year of the election and then the year after each of these elections. Again, going back with the S&P 500, you can see that the blue bar represents the returns the year of the election, and then the green is the year after the election. You can see that it looks like some randomness here, but the important thing is when we average it all together, the average return during an election year was north of 11%, and the average return after an election year was 9%. Again, strong performance regardless of who was elected and put into office. When we look at international equities, and the reason I bring this up is our clients, if you're a client listening today, you have globally diversified portfolios. You might be curious, well, how does this affect international stocks? Once again, we can see if we look at the 4-year presidential terms for international stocks, regardless of who is in office, it averages out to somewhere close to 9%. And also for emerging markets, you see almost a 10% average across the 4-year terms. So what are the principles that win as we cope with this new situation that's coming? First is identifying patterns or trying to predict what the market is going to do is very difficult, if not impossible. So avoid it. Don't even try. Number 2, and this one's hard to follow, but it's very important. Stick with it here. The expectations or the anticipation of the election outcomes is already priced in the market. It's already embedded in market prices. Another way of saying that is if there was a candidate that was very honest, dignified, charismatic, really mobilizing people, pulling people from both sides, and had a 90% approval rating, do we think the equity markets would actually be trading higher right now than they are today? Obviously, the answer is yes. So what that means is that all the fears, all the concerns, all the worry about these two candidates winning is already priced into the market. That means that yes, there'll be some volatility after the election, but not as much as if there was a sudden change or a sudden new candidate arrived on the scene. Number 3, with positive average equity returns, staying invested and staying in the market is the dominant strategy. We saw that the average return of the year of the election was 11, the year after the election was 9, over the 4-year term just somewhere around 10%. That means owning equities is the dominant strategy. So remember these 3 principles to be successful and to win. So I'll leave you with this. Leadership is 2 fundamental things. The first is interpreting the situation. Come November 9th, that Wednesday morning, there will be a new president-elect. Prepare yourself. In fact, you might as well go ahead and say, whoever I'm not going to vote for, I'm just going to anticipate that they win, since you can prepare yourself psychologically. And remember that that doesn't change your investment plan. And now with this perspective, you know what is the key to being successful as an investor in the long run. And then number 2 is, once you assess the situation, then what are the actions you need to take to cope with it effectively to live a good life? Know the principles, know your investment plan, remain disciplined. That's how you accumulate wealth over the long run. If you're a client and you have any concerns or questions with this, by all means, let us know. Love to chat with you. If you're not a client watching this and you'd like a second opinion of your financial situation, give us a call. We'd love to schedule that and chat with you about whether it's appropriate for you and give you an overall assessment, a 360-degree review of your situation. Best of luck with the election. Remember, stay disciplined, know the principles that win, and the best of success to you.